Afternoon and good evening to all. Today it's turning out an exciting session for the Euro USD traders. We are seeing a lot of the volatile moves, and it is looking like we are finally going to see a breakout for the Euro USD from its narrow consolidation range of 1.185 to 1.190 up last few days. We will search for the optimum levels to take advantage of these breakout. On the data front, we can say it's a PMI day. Today we had PMI releases for July from major economies in Asian as well as European trading hours. Looking at the services PMI data of Australia and Japan, we can infer that both the economies are still struggling to kickstart the economic activity in services segment in light of the continued spread of new COVID variants there. In contrast, China is seeing a sharp acceleration in services activity after June's low. There were no significant revisions in the final PMI numbers for July for major European economies. We are continuing to observe strong growth momentum across the region in both the segments of the economy. Both segments means including the manufacturing and services segment. Today's services and composite PMI data for July is a pointer in this continued expansion of activities there. Euro area retail sales numbers also recorded growth, though at a slightly slower pace of 1.5% in terms of month on month and 5% in terms of year on year for the month of June. The US ADP employment change release caused a sharp decline in the US dollar as it was at 330,000 only. It is a lot lower than the expectation of almost 700,000. It was also the softest pace of job creation in private sector of the US economy since February of this year, as it is the as it is considered a preview of sort to the non-farm payroll data which is going to be released on Friday. Some moderation of expectations for the same is warranted now that we have these numbers on the lower side, and that is what led to the US based move on the lower side. It kind of nosedived only to be rescued by the Fed's vice chairperson, Mr. Clarida's speech at the Peterson Institute for International Economics. Mr. Clarida, in his assessment, is quite confident that the US economy would have progressed a lot towards the goal of maximum employment by the end of 2022. It will warrant the Fed to start hiking the interest rates by early 2023, and this provided a strong impetus for the USD to claw back its earlier losses. The US ISM non-manufacturing PMI, which was also released around the same time, also helped. The non-manufacturing PMI is at 61.4 for the month of July, which is the highest since comparative records starting 1997. It points to the rapid growth in US services economy, which is doing a lot better than prior expectations. On a commodity side, US WTI crude oil inventories have increased by more than 3 million barrels in contrast to the expectations of decline of 3 million barrels. This is likely to keep the crude oil prices under pressure for at least next couple of sessions. Now let's shift our focus to the technical side. First we will consider the outlook for Euro USD, and after that we will also see what's happening in the S&P 500. Let's start the day with the Euro USD's technical outlook. This is the daily time frame chart, and here this chart was made before the Euro USD started to give up its gains, and by the time I began recording this session, the Euro USD was trading close to 1.184, almost 50 pips lower compared to the reading recorded here. And now it looks likely that this consolidation lows, the level of 1.185 is finally going to give way, and in next couple of days we can expect the Euro USD to get towards the level of 1.1800, and if it doesn't really find any support closer to the immediate swing low, then I think in a week or two we can even expect the euro usd to decline further towards the prior swing low, which is there around 1.17. So I think we will have to get ready for shorting the euro usd, and all that we need to do is figure out what are the optimum levels, what are the levels which are likely to provide us a stop loss level which is going to be fairly sharp, so as to make sure that we don't really lose too much money in case we happen to be wrong. And to that extent, we can consider these chart of lower time frame where we have this critical marker of central pivot point of this month's pivot point series around 1.185, and if we see the day closing below this, and in tomorrow's session if euro usd consolidates thereabout, I think we can be fairly confident of euro usd's change of trajectory from medium term perspective, and in course of time the euro usd can be expected to decline at the minimum towards the first support of this month's pivot point series. So for next couple of hours we will have to be patient and see how the price action evolves. It shouldn't reverse the course after this decline, and I am expecting the euro usd to close somewhere close to this central pivot point, and a further consolidation without any fresh buying momentum will provide us good enough reasons to go short when the trading begins again in tomorrow's European trading hours. If we consider the regression curve, it has been on the higher side, it is pointing higher, but now that the price action is again shifting back on the lower side, we will have to trade cautiously, and mostly we will have to take the help of lower time frame formation where we have this lower highs and lower lows combination, and this time around we are even seeing a breakout of sort below the prior consolidation lows and 200 SMA. And if the price action continues to trade with a significant selling pressure, I think it will be a pointer in the direction to come. We can expect the Euro USD to trade with the bearish bias, and all we have to do is look for opportune time. And for that, we can take help from this convergence zone of two SMAs, the 50 and 100 SMA, which are converging close to 1.1875. And this can be considered as the final resistance. And now, after this sharp decline, the euro USD shouldn't really bounce back above this convergence zone, and if it does, then that will be the sign that we should get out of the trade and sit on the sidelines. So if you are looking to short closer to the 200 SMA, the price band of around 1.184 to 1.185, the convergence zone closer to 1.187 to 1.188 can be considered as a stop loss area, and on the lower side the targets can be kept closer to 1.180, and if you are willing to wait, you can even wait for the euro USD to go on to touch its immediate lows, the consolidation lows of around 1.175. Now let's see what's happening in the equity segment where we are seeing sharp moves in today's session also. This is the daily time frame chart, and in yesterday's session I had talked about the possibility of shorting the S&P 500 closer to 4,400, and if any of you had gone in for that trade, I think the trade might be still open. It hasn't really gone on to hit the stop loss, as the stop loss was suggested closer to the prior day's high. And in today's session, we are seeing some selling pressure building up after the start of US trading hours and US trading session, and I'm expecting these levels to hold. So unless and until we have any significant breakout on the higher side, we can continue to look for shorting opportunities closer to the prior swing high. And even if the Euro USD continues to consolidate in this narrow range, we will stand to gain as we are shorting the S&P 500 closer to its resistance zone, its highest level. So for any trade, the scalping strategy should be adopted in S&P 500. Now that we have the S&P 500 trading in a sideways manner, if we consider the price moves of last 2 weeks, it has traded in a narrow range. Only 1 percentage point move has been observed if we count it from the highest point to the lowest point of last couple of sessions. And in yesterday's session, it rebounded after getting close to the consolidation lows. And now again, it is struggling on the higher side. So this range can also be exploited, and all we have to do is short it closer to the highs and wait for it to again descend towards immediate low. Only after a clear cut breakout on either side we can be confident of a directional change. Till then, all we need to do is keep looking for optimum opportunities, and here the stop loss as well as the take profit will need to be kept close. We can't really go for big trades. Rather than that, the intraday kind of trading opportunities can be exploited. If we consider the pivot point formation, the price action is still in the bullish bracket. It is in between these first resistance, which is there around 4480, and the central pivot point, which is expected to act as the immediate support. And we will have to keep in mind that the underlying bias still remains bullish, so we have to trade cautiously. But on the current levels, it is not really prudent to go for the long trade either. Rather than that, scalping opportunities should bring us more profit. So we can expect the break on the lower side below this convergence of three SMAs, the 50, 100 and SMA, 100 SMA, which are converging closer to the price band of 4,400 to 4,410. And if we see a breakout on the lower side below this narrow range, we can expect the decline to at least extend toward this immediate low, and that is likely to bring the gains closer to 1 percentage point, not exactly 1%, but close to that. And stop loss is not going to be much wide either. I think the stop loss just little above days high should be good enough, or the prior days high, which is going to be around 4,430. So that's my take looking at the current price formation of the S&P 500. If any of you have any idea or any query to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. You can also check out the Lucoscopy Analytics page for further coverage of the market developments whenever you want to start trading. The JForex platform is at your service. We are also available on the Facebook. You can follow us there. Thank you all for joining in. Have a fabulous day ahead. See you next time. Till then, goodbye.